Hi, and thanks for watching. In this video, I want to talk about the chart MP, do a little bit of analysis on it, and show you the strategy that I'm using and how it's been working for this chart really well. It's a good chart to review to explain the indicators and the strategy that I am using. So in our day trading group on Skool, which you can join below this video, in the classroom section, I have been documenting all my trades in the trading challenge. And on May 28th, I entered the trade of MP in a small position here. And I'm going to explain why I entered it here. And then in June 17th, I exited the position for a 59% gain. So I'm going to explain my entry, my exit. And if we look at the chart, just going over the strategy that I'm using with this chart is a good example of all the indicators that I've been using to make some of the trades. So again, our Skool group, you can join, you can see the trading challenge, you can come become a member. And if you're just starting to trade, then you can certainly find that group useful. So the first thing that I do with this strategy is we jump on a weekly or a monthly chart, and we want to just look at the market structure. So we can see here back in April 2022, we can see we had sort of what I believe is the all-time high, and then things started to break down. So if you were in this stock, you might want to understand, based on market structure, when would be maybe a good time to get out. So we want to kind of look at some candles that perhaps closed to indicate that there was a change in character. So we've got a low here. So with the weekly candles, technically, this candle here on June 2022 closed below this wick. So that's really an indication that the market structure has broken down. Now, there are some other indicators that we can use as well to would have helped you sort of get out of the position earlier. But we've got a high, a low, a higher high, and then we don't really have a lower low till this particular candle there. So right there is another sign, and there would have been others, that says things are probably not doing well market structure wise. You might want to scale out of the position. And you can see from the position there around the 30s, this particular stock fell quite a bit, all the way down to the $10 range. So as the stock approached 10, we want to kind of identify, when does this stock start to look bullish again? And you can see here, we've got a green bullish engulfing candle and a 32% week. So right here, when this candle closed, above these two candles, that's an indication that, we've got a change of character. The market structure could be turning bullish, and it certainly did. So you might not want to buy right there. You might want to buy a back test. So this strategy encourages you to not buy breakouts, but buy a back test to confirm that the stock is going to continue on. And here would have been a good example to buy the back test of this particular breakout, and so on. And now we look at the market structure. We've got a high here, we've got a low, we've got a higher high, a higher low, and now the market structure is bullish. So you certainly wouldn't want to enter this stock anywhere here. We've got a higher high, a lower low, a lower high, lower low. We've got a bad bearish market structure, but we've got a change of character here. We've got another higher low here, and things are looking much better. So that's just based on market structure alone. Now, if we also put on some indicators, and let's first put on maybe just a simple moving average. So we've got the 50 and the 100. The 50 is in green, and the 100 moving average is in blue. So if we kind of look back up here where we indicated, there was a breakdown, we basically, based on market structure, it wasn't until this candle closed below this low wick here. But right around here, if we were also to use some other indicators for some confluence, we can see here that, we're under the 50-week moving average, and that's usually a bearish sign. So we broke down, and then we've been rejected week after week. Here, it can't break through that 50 moving average. That could be a sign that, you might want to scale out and take some off the table. And then it fell down to the 100 week, lost that, came back up, and then was rejected again by the 50 week. So again, this could have been another telltale sign. Hey, we can't break through that 50. You might want to, scale out even more. And then things, you can see, just broke down And you can see that this 50 moving average was sort of resistance, the whole way down. Resistance here, and so on. And then you can see when we notice this bullish engulfing candle here, we said we've got a change in character here. The market structure is starting to look good. Well, maybe a good time to buy would have been the breakout and the back test. Here we've got a back test 2 weeks in a row perfectly, 3 weeks, where this would have been a good sign of a good area of support to enter this particular trade if you wanted to. And then further on, we can see that we have another area of support here around this moving average, and I'll get to where my entry was right around here. So that's simple moving averages. So that would have helped us if you were in the stock to maybe scale out here along with the market structure, and then to get back in, maybe here would have been a good back test, and here was a back test where I entered. So that's simple moving averages. And then the other thing that we use are the Ichimoku Cloud. So we'll take this off and then we'll put the Ichimoku Cloud on. And we can see here that right around this same area where the simple moving average was, right around here, we can kind of see, if we zoom in, that we have peaked here, and then now we're underneath the blue line. So the blue line is the conversion line, and it's a good, along with the baseline, a good indication of bearish or bullish. So generally, if the stock is above the conversion line, that's a good sign. Here you can see we've broken down. We're sort of underneath the baseline, underneath the conversion line, but we're still within the cloud. So when it retested here and got rejected from the conversion line, that could have been another confluence that is not going too well. And then we broke down, rejected again here. Here we tried to back enter the cloud, rejected. So we've got resistance around the cloud. So there's more confluence that things are not looking good. And now we're breaking down again here, and we keep testing the baseline, the conversion line. But right there would have been more signs that getting rejected, along with some of the other indicators and general market structure, that things are a little bit bearish now. Certainly below the cloud, and the future cloud is red. Below the conversion line, below the baseline, not really a great sign with the Ichimoku Cloud. But if we scale down here, where we are suddenly now closing some candles above the conversion line. So we've been below the conversion line this whole way down, pretty much. And now we've got a breakout of the conversion line, and we've got a big bullish engulfing candle that breaks the conversion line. So it opened here through the conversion line, through the baseline, into the cloud, and then came back. And now we've got a back test here of the cloud. So we're in the cloud, and we've got back test, back test, back test. And if we throw our moving averages on, that's right in line with this moving average. So there's more confluence that this zone could have been a good time to enter. And then right here is actually where I entered. So this particular area here, we've got a breakout rejected at the 200 moving average, and then we've got a back test, and I entered right here at around $19. So when this week touched the moving average here, and then touched the cloud here, and it almost touched the 200, this is an area where I entered the stock. It was a breakout, rejected at the 200, and a back test, and this is the entry that I made right here. So we've got a 50 moving average, we've got the top of the cloud, we've got the 200 down there. If it dropped even further, you could use that as extra support. So that is where I entered the stock. The bullish, the market structure is bullish. We've got a breakout, we've got a back test, and we enter here at the moving averages and the cloud. So that was some confluence that area was a good zone to enter. And then we exited in our trading challenge here. We exited, where did we exit? Right here. So I exited right here around the $35, and we're going to explain why we exited right here with one other indicator. Well, firstly, you can see that week after week, we've got a big blast up there. We've got a 17% weekly candle there. We got another 18% weekly candle, and then a 23% weekly candle. So things are generally extended, tend to be overextended from the conversion line. So it's sometimes a sign that things might cool off and might pull back. But there's one other indicator that we want to put on to give us even more confidence that this could be a good time to exit this particular stock if you wanted to trade in and out, and that is the GANN Square. So we'll pull up the GANN Square here, and below this video, I'll have some information on the coordinates for this particular GANN Square, how to set these up. And I have it drawn, but I'll just redraw it. I'll just confirm my coordinates here to make things go a little bit quicker. 14 and 10. So 14 and 10. So I'll draw this out, and then below I'll give the information regarding what these numbers are supposed to be if you've never drawn with a GANN Square before. So basically, what the GANN Square is going to do is it's going to give us areas of support and resistance, and then along with other indicators, we can use that as confluence for resistance and support zones, good entry or exit position. So what we want to do is we take the GANN Square and we want to find the lowest position on the chart. On the chart. So the lowest position here, if we zoom in, was right here at the start, and the low was 978. So we'll click there, and then we drag it out. Now there's certain numbers that you want to drag it out to, and I'm going to include those below this video. But for this particular example, we want to go up to 1440. So we drag it out to 1440. And in the settings, we want to go to the price bar ratio. And there are numbers that you try out for this. And for this particular one, 10 works the best. And then what we do is we look for some market symmetry with these lines. So we've got levels, we've got angles, and then we have arcs. And basically for some stocks, they follow market symmetry really, really well. And those numbers that I showed you, there's a list of numbers that you use for those coordinates, and you try them out until you find a set of numbers that gives you the best market symmetry. So what you want to do for this particular one, so there's not a ton of data, but we want the levels to show up for resistance zones. So we've got an orange level there, and then we've got a blue level up here. And further on, you've got a green level. So as the stock progresses, these levels are going to be good indications of support or resistance zones. And then this larger green level is the 45-degree angle, and that tends to be a good level of support and resistance zone. So this particular one, with the coordinates that we have in here, if we zoom in, we can see that it is following the market structure. Let me just zoom out a little bit, quite well. So we started here, we basically are following this blue angle, and it's touching it as support here, touched it support back here, broke down, came down perfectly to this 45-degree angle, touched that, and then went back up, and then came back up to this orange level, and that was met with sort of resistance. It couldn't break past that orange level or maintain it as support, so it broke back down to this blue angle and perfectly support here, and broke back down. Now we're kind of using this orange angle as a good support and resistance zone and sort of maintaining this quite well. But then, it lost the angle there. And if we kind of zoom in for this market structure, here's another area of confluence that right around the 42 area, we sort of lost this orange level. We broke down, came back, and was rejected at it again this week. So right around here could have been an indication that, things are going to go lower. And again, if we put on our simple moving averages, that's right where it was rejected at the 50-week moving average. And we don't want to muck up the chart too much, but right here we were rejected from the cloud, and right there, here we go. There's some great confluence here. Couldn't break the conversion line. So rejected at the conversion line, rejected at the orange GANN angle, and rejected here at the 50-week moving average. So there's some confluence that things aren't looking quite well. You might want to take some off the table. So that's the GANN orange line there, indicating that we've got some market symmetry telling us that things are going to get rejected. And then you can see the stock falling back down and then met the 45-degree angle here as support perfectly for several weeks and maintain. But we got a bearish engulfing candle, couldn't maintain it, came back up, and then was rejected again. So if you were in the stock here, for whatever reason, you might want to take it off the table again, and we continue to go lower. So support, flip to resistance, it's going to go lower, and it goes all the way down to August 24, when we had a lot of things go lower in the stock market. And now we've come back up, and right around here is a back test of this arc. And this is where I entered the stock, because if we put the simple moving averages on, we've got more confluence there with those 50 moving average and support at the 100 in case it went lower. And we've got the Ichimoku Cloud, the top of the cloud there. So that's exactly where I entered the stock. And if we look where I exited the stock, it was right here at this angle, which was the 45-degree angle. So I took my position off the table because that's a clear resistance zone right there. So there you can see, using several different indicators, the Ichimoku Cloud, moving averages, this GANN Square showing market symmetry, that this was a great entry, 19, and this is a good exit, 35. It's quite a bit of a gain. I don't know exactly. We're looking at, something like 50. Oh, yeah. So over 100% gain there for that particular stock. I think I made an entry here, and I made another entry at the 24 zone. So I think my whole gain on this particular sale was around 60, because I entered in at the $24 range as well. So I made some small entry here, another dollar cost average here, and now I exited here at this zone. So there is just showing you how this market symmetry, this momentum style of trading works. And then for re-entering, you might want to draw some fibs. So I also have a fib level here that shows some more support and resistance zone. So you might want to re-enter at the fib around 30 if it comes down that low. But if you jump on the 4-hour chart, you can see that potentially there's a little support area here with the 50 moving average on the 4-hour chart, where if you want to get back in, we've got a breakout, maybe a back test here. So you might want to re-enter here around $30, a small entry, knowing that it might drop further down to the fib level here. And if we put the Ichimoku Cloud on, you might want to also consider that it might need to come back down and touch the conversion or the baseline. So you scale in with your entries, and then I took out my position here. And then if I want to go back in, I'm going to scale back in with some potential support zones here, looking at the fib level, which it might retrace back to, or the support here around the Ichimoku conversion line and the baseline. So I hope that you found that useful. That kind of gives a rundown on the strategy that I'm personally using. A lot of the indicators and the things just lined up really well for this. And that's what I've been trading with in my trading challenge, doing the breakout, buying the back tests with confluence from some of these indicators. So I hope that you found this useful. Below the video, certainly come and join our community on Skool. You can learn more about the strategy, or just document your own journey, what strategy you're using. We've got a lot of members now who are contributing, being accountable to the group, and helping them stay on track to continue on staying consistent with their trading. So I hope that you found this useful, and I will see you in the next video.